Good morning, everyone. My name is Kyle Burgess. I am the chair of the board of directors for the Newmarket Chamber of Commerce and also a senior employment lawyer with Minkin Employment Lawyers. I want to begin our meeting by acknowledging the land that we live and work on. This is an important step on our path of truth and towards reconciliation, which is the work of all Canadians. I want to acknowledge that we are on the traditional territories of the Wendat, the Haudenosaunee, and the Anishinaabe peoples, whose presence here continues to this day. We also would like to acknowledge this is the unceded treaty lands of the First Nations of the Williams Treaty and thank the signatory nations respectfully for sharing these lands with us. We would also like to acknowledge the Chippewas of Georgina Island First Nation as our closest First Nation community, and we extend the hand of partnership to them so we can live in a good way and in accordance with our treaty agreements. We're all treaty people and we all have responsibilities to the treaty agreements. I'd like to welcome everyone here this morning. This is going to be a fantastic conference. Really excited about it and happy that you could all join us here and really excited to hear from all of the panelists. As everyone knows, over the last year, COVID-19 has caused a significant impact to the global economy. As a result, the world has undergone considerable change and it's resulted in the emergence of really a new economy. Many sectors and industries have been forced to pivot and adapt while also rethinking their business models. With this far-reaching impact on businesses, questions have emerged on how much of this forced change is actually here to stay. This summit will engage industry experts across a variety of sectors, such as energy, manufacturing, e-commerce, retail, innovation, agri-food, which will provide industry with a sort of blueprint to prepare for that future economy. I'd like to thank our partners, of course, at TD and York Link, York Region Economic Development, in helping us create this platform for industry, and to the Canadian Association of Petroleum Producers to help drive the conversations. At this point, I'm going to introduce our MC for this summit, Karen Dubo, the Newmarket Chamber's Innovation and Entrepreneurship Ecosystem Advisor. Karen is an experienced entrepreneur and change agent, having founded a successful Ottawa technology firm and worked with numerous companies and startups on their innovation programs. Karen is a mentor with the Ella Women in Entrepreneurship program at York University and with the Helix Entrepreneurship program at Seneca College. Karen is active with community organizations, serving on boards of community food banks, public libraries, and post-secondary education institutions. Karen, thank you very much for being our MC and help drive the conversations for today. I will now, because time is of the essence, I'd like to pass over to you the virtual microphone.
Thanks so much, Kyle. It's a pleasure to be here. And I'm really excited about the lineup in the conversations that I had with the panelists leading up to this conference. There's a lot of amazing insights. So this is going to be a great conference. Before I get underway, I'd like to ask Charles Banfield from York Link, York Region Economic Development, to say a few words. So Charles, over to you.
All right, thank you, Karen. Good morning, everyone. My name is Charles Banfield. I'm the Manager of Strategic Economic Initiatives at the Regional Municipality of York. And on behalf of York Region, I'm very pleased to welcome you to day one of the Economic Summit 2021, which is brought to you by the Newmarket Chamber of Commerce in partnership with TD Bank and York Link, York Region Economic Development. It's well documented by now that we're living in unprecedented times, and the COVID-19 pandemic has already had an historic impact on all aspects of our society. Businesses of all sizes have been significantly affected, regardless of industry. So one of the goals of this summit is to enable the sharing of insights from experts and business leaders so that their knowledge can be leveraged to help guide us as we move into a post-pandemic economy. Today's agenda features an exceptional list of speakers who will discuss the state of the economy and the future of manufacturing, energy, and infrastructure, with more to come on day two. And I, for one, am very much looking forward to listening and learning from their expertise. So thank you all once again for joining us today, and I'll pass it back to you, Karen.
Great, thanks so much, Charles. I was remiss in saying that Charles has an extensive background working in the public and private sector and across a range of industries. So his work in York Region has been very critical to laying the foundation for our future growth. So thank you again, Charles. We really value the partnership between the Chamber and York Region's Economic Development team. I'll now turn it over to Dana Ungaro, the Commercial Banking Account Manager with the Newmarket Center, TD Newmarket Center, to start off the conversation. Dana, welcome.
Thanks, Karen. Good morning, everyone. I'm Dana Ungaro. I'm an account manager with TD Commercial Banking here in Newmarket. I'll be introducing Sri Thanabalasingam, an economist for TD Bank Group. Sri tracks macroeconomic developments across all major economies, including the US, Canada, Europe, and China. He regularly provides data commentaries and produces analysis on a wide variety of macroeconomic issues. Prior to joining TD, Sri was a senior economist at the Bank of Canada, where he covered the US, China, and other large emerging economies. His research has been published in academic forums, and he has presented his work at conferences across both Canada and Europe. Thank you, everyone, for joining, and I will pass it over to Sri.
Thank you, everyone, for having me here today. I'm just going to be sharing my presentation. Let's get this going. Okay, great. I think you all should see this. Okay, awesome. Yeah, so thank you for having me here. I would have loved to do this presentation in person, but obviously the pandemic has had us conduct these webinars, and hopefully we can go to some semblance of normal sooner rather than later. But as you think about the economic outlook, over the next few years, the pandemic has really created a significant uncertainty. And so when we think about the forecast, we want to navigate through this sort of uncertainty. And so there are a few tensions that exist within the economic forecast. We know that countries such as Canada is going through the second wave or the third wave of the pandemic, and other countries are going through the second wave. So we have a resurgence of the virus. And so there's a bit of a race then between viruses and vaccines, and when will vaccines gain the upper hand, or will viruses mutate, rendering vaccines less effective? And so you have this sort of uncertainty that's we have to deal with as we think about the economic recovery. And then when we think about health and economic outcomes themselves, over the long run, it's clear that you need to have a health solution in order for economies to produce at their capacity. Without that, economies will continue to be shrouded by the health crisis in itself. But over the short run, whenever you do have any sort of resurgence of the virus and lockdown measures come through, it does have an impact on the economy itself. So you have the short-term sort of volatility that does occur because of the virus. And now when you do have lockdown measures, there has to be policy supports that come along with it, either from the government and of course the central banks, in order to bridge the gap for businesses and households. Now, when we think about the legacy of the pandemic, and that's something that we've already mentioned here, and the impacts that it'll have, with all of this government support that we've seen all around the world, there's a lot more government debt. And that's something that has to be dealt with in the coming years. We have also seen consumer demand shift from services towards goods and real estate during the pandemic period. How much of a reversal will occur as we emerge out of this health crisis? And inflation. Inflation is something that we haven't even talked about for the last few decades, actually. Now, with all of this liquidity support, could we see a resurgence in inflation? And how will we deal with that? And the longer running trend is on deglobalization. This was something that was occurring even prior to the pandemic, when we think about the US-China trade war and the issues around that. And now with the pandemic, it's more on national security concerns, with Canada's inability to produce vaccines at home, as well as protective equipment. And so will we see deglobalization accelerate and supply chains also shorten over the coming years? So with that in mind, I'd like to start off with looking at the vaccine rollout across the world. And here we see Israel and the United Kingdom really pushing ahead in terms of vaccinating their population. The United Kingdom is adopting a similar approach in terms of Canada, in terms of getting one dose of the virus out first before extending the interval into the second dose. We've seen an acceleration happen in the US recently. About 40% of the population has been vaccinated, so that's a good sign. In Canada, we've seen an acceleration as well, but as I had mentioned, there's a bit of an interval between the first and second doses of the vaccine. But as supply ramps up, we could see that share of the population with the second dose also increase. In Europe, on the other hand, there has been a bit of a lag in terms of the vaccine rollout itself, and so they're only sitting at about a little over 20% of the population receiving at least the first dose of the vaccine. And so with those issues, and you think about the forecast, the second wave and a slower vaccine rollout is weighing on the European economy. So we've revised down the forecast on the US end, or on the Europe end, but for US, we have revised up, and Canada, we have revised up as well. So on the US, we have seen an acceleration of the vaccines, and we see a lot more fiscal stimulus coming through. And I'll touch on that a little bit later on in the presentation. And for Canada, we've seen resiliency in the economy, and that's the main theme for the revision up for the Canadian forecast, and I'll touch on that a little bit later as well. So just quickly on Europe, and what we have seen is that the European recovery is lagging, and the chart here shows purchasing manager indices, where when it's above 50, that means that sector is in expansion, and when it's below 50, that means that sector is in contraction. And here I've charted both US services and manufacturing sectors, as well as Euro area services manufacturing. And what you notice is that after the early spring lockdowns of last year with the first wave of the pandemic, US services manufacturing, as well as Euro area manufacturing, moved into recovery mode. But services have continued to contract. And this is because of restrictions that were ongoing, the pandemic, the first wave, and then the second wave of the pandemic hitting European economies hard. And only recently we've seen this, the Euro area services move into that 50-point mark in itself. So there is a little bit of a recovery that's occurring, but it will take the vaccine rollout to accelerate in order for this area of the economy as well to move into expansion. So we are seeing some improvement, but over the past year or so, European services have continued to contract. Now, turning quickly over to on the China end, as many of you know, China faced the pandemic first in the first quarter of 2020, went into lockdown. And since then, both manufacturing and non-manufacturing has been in recovery mode. You may have heard over the last month or so, Chinese growth in the first quarter of 2021 was exceptional. Some headlines had it at 18%, but that's a little bit misleading because that's a year-over-year number. So when you compare it to 2020 first quarter, because of a low base year, you end up getting a very strong growth rate. However, on a sequential basis, growth is slowing in China, and you would expect this for economies as they get closer to their productive capacity, growth to start slowing. And for China itself, until there's a global economic recovery, a total global economic recovery, China itself cannot fully recover. But having said that, the chart on the right shows China's share in global trade. And what you notice is that from 2019 to 2020, there was a significant increase in China's share of the global marketplace. And this is because with many people staying at home because of lockdown measures around the world, there was an increase in demand for consumer goods. And many of these goods were produced in China. And as a result, China was able to gain more of a foothold in the global marketplace. And so we saw China gain more economic clout in 2020. Now, there could be a little bit of a reversal as we emerge out of the pandemic period, but still China has more influence now than what it had during pre-pandemic times. Now, turning a little bit closer to home on the US, and as I had mentioned, the vaccination rollout is accelerating in the US, and there's a lot of fiscal stimulus coming through. Last year, there was the CARES Act, which provided about $2 trillion in fiscal stimulus. That was followed up by $900 billion late last year. And recently we saw another $1.9 trillion in the American Rescue Plan Act. And so all of this comes together, providing a significant boost to economic activity in the US, about 2.5 percentage points on growth in 2021 alone. Now, as these fiscal stimulus dissipates into 2022, it provides a little bit of a drag on growth. Now, having said that, we know that there's more fiscal stimulus in the works in the US. There's been talks of the infrastructure plan, a $2 trillion infrastructure plan. On top of this, Social Security supports another couple trillion. And this is on the Democrat side, but it still is a popular option for Republicans now as well. So there is likely to be further stimulus that comes through, maybe not at that $2 to $4 trillion price tag, but something a little bit smaller than that, but that could flow through in 2022, providing an upside risk to this forecast. And it does have then positive spillovers to Canada as well. Speaking of Canada, turning to the Canadian forecast, as I had mentioned earlier on, Canada, so far through the pandemic, has been a story of resiliency. The chart on the right-hand side shows the GDP index. It's a level index, and that as well as a stringency index. And this stringency index is produced by the Bank of Canada. It quantifies and aggregates the restrictiveness of policies in response to the pandemic. And it's inverted. So if there's a decline in that stringency index, that means policies are becoming more restrictive in provinces. And what we saw during the first lockdown, GDP declined significantly, and at the same time, restrictions were really tightened across provinces. Since then, their reopening measures through the summer of 2020 allowed GDP to recover, but when second wave hit during the fall, things were tightened in provinces, but GDP continued to recover. And so this discrepancy is suggesting that there's increasing resiliency in the Canadian economy. So there have been shifts, as what has already been talked about, shifts from doing business in person towards online. E-commerce sales as of February were about 100% higher than what they were a year ago. So there's been a significant adaptation by consumers and businesses alike in terms of conducting business transactions. Now, when we think about the third wave of the pandemic and what we're undergoing right now, things could be a little bit different. Early signs, if you look at the employment data that came out for April, showed total hours worked in the economy across all sectors fell, mostly across all sectors fell. And that would suggest that the economic recovery reversed slightly in April. And so that could be due to the fact that the pandemic is more severe this time around. It may have increased health concerns, and restrictiveness is also a little bit tighter this time compared to the second wave. So there could be a little bit of a reversal in the economic recovery in April and May, and hopefully things start reopening in June, and we can see a strong bounce back. And that is what we have seen during the second wave of the pandemic. So this chart here shows household goods spending, which was quite strong through the health crisis because people were staying at home and buying a lot more housing-related items. When the second wave hit and restrictions were tightened specifically in Ontario and Quebec, we saw spending plummet in these areas in those provinces, but it continued to go quite strong in less restricted provinces. Now, when things were reopened in February, we saw a strong bounce back in spending in those areas. So when we think about reopening, hopefully again in June and into July, we can see a strong bounce back on consumer spending as well. Now, what's underlying that is Canadians have saved a lot through the pandemic. In 2020, we calculate these additional savings. So above and beyond what Canadians would save in a typical year sits at around $200 billion. Now, a portion of this has already gone towards real estate and financial markets, but in terms of deposit balances, about an additional $100 billion still sit in consumer deposit balances. And if these savings are deployed as the economy reopens, we can see a pretty strong bounce in consumption. In our baseline, we're expecting about 10 billion or so to be spent, and this is quite conservative. If you think that more of it will be unleashed as more services reopen and there's more access for Canadians to either travel within Canada or spend on other recreation services, restaurant dining, we can see a pretty strong increase in consumer spending. Now, in the meantime, we're seeing a very uneven recovery in the economy. Places that you can work from home and conduct business online, there you have seen employment get back above pre-pandemic levels. But then for these high-touch services, restaurants, accommodation, recreation service, their employment is still very much below pre-pandemic levels. So we have a very uneven recovery in the economy right now. When we think about healing in the labor market, especially in those hardest hit areas, if you think about automation and digitization, if that has occurred and that has replaced some of these jobs, it could take time for these people to find work elsewhere. But Canada, if you compare to the US, has fared a little bit better in terms of the labor market recovery. And what I'm showing here is a counterfactual unemployment rate compared to the official unemployment rate. Unemployment is a function of your labor force. But if more people leave the labor force, you can see a decline in the unemployment rate, which is misleading because people have left the labor force because they couldn't find employment opportunities. And so if you kept the pre-pandemic level the same in the US, you would see a higher unemployment rate. So it's because more people have left the labor force in the US that you've seen unemployment rate decline by more. But in Canada, we've seen the labor force get back to pre-pandemic levels because of policies that have kept workers engaged with their employers, allowing for greater hiring as the economy reopens. Another aspect through the pandemic is all of the fiscal support that we have seen provided by the federal and provincial governments. In terms of federal supports, a recent IMF study found that without these supports, the economy could have contracted by an additional 7 to 8 percentage points in 2020. So that would have been a 13% contraction without fiscal supports. But there's no such thing as a free lunch. So with all of that fiscal support, you've seen the debt burden rise significantly by 20 percentage points from 2019 to 2020. And if you look at the recent federal budget, there's no indication that this federal burden, debt burden, will come down quite quickly. Instead, you have a lot more COVID-19 related supports feeding in through to 2020, 2021. And then after that, longer term support, spending measures, particularly in the form of childcare to come through. This will be helpful for building long-term economic capacity for the Canadian economy. Increasing labor force participation amongst women would be quite welcome in terms of getting first opportunities for females, but as well as building long-term capacity for the Canadian economy. Now, when we think about how is the government able to take all of this debt, when we look at low interest rates, and this is something that the government has pointed to, is debt servicing costs have been really low, and a contributing factor has been the Bank of Canada that has helped keep interest rates low. The overnight rate sits at 0.25%, so that's the effective lower bound, as well as the Bank of Canada's started the quantitative easing program to buy Government of Canada bonds, which also brings down yields as well. So together, this has kept borrowing costs quite low. And the Bank of Canada, in its recent monetary policy report, said that it only sees in late 2022 for economic slack to be completely absorbed and inflation to sustainably reach around the 2% target. And so we think that the Bank of Canada will start raising rates at the end of 2022 before gradually getting up to 1.75% by 2024. Low interest rates have another impact, and this is not a surprise for any of you. This is on the housing market. At the onset of the pandemic, all the predictions, if you look at the various analysts, is that there was going to be a drop-off in housing. There was going to be a mortgage a debt deferral cliff, and at that point, housing will go bust. But one thing we've learned about over the past many decades is betting against that Canadian housing market could be your downfall. What we have seen is sales pick up significantly. Low mortgage rates have allowed millennials to enter the housing market, cheaper costs there. There's been a race for space. So this is people living in the urban cores, because they could work from home, move out into the suburbs. We have seen all of these impacts just contribute to overwhelming home ownership demand. And at the same time, supply was already very tight. And that has deteriorated further. So when you combine strong demand and low supply, you have very strong price growth. And that is what we have seen. We're not expecting prices to come down all that much because supply is still very tight in the Canadian housing market. And when we think about as the economy and the country emerges out of the pandemic, the Canadian government still has an immigration levels plan that is providing a platform for more immigrants to come into Canada, and that supports home ownership demand in itself, and that will then support housing prices. So this is what we see on the housing side. And just to finish up with a look at the Canadian dollar and oil prices, we saw the Canadian dollar appreciate over the second half of the year last year with rising oil prices. With the oil prices continue to go up a little bit, we expect the Canadian dollar to appreciate a little bit as well. But as oil supply increases, we expect the dollar to depreciate slightly and settle at around 78 cents over the longer term. So with that, I'll turn it back to you, Karen, and open to any questions.
That's wonderful. Thank you so much for sharing with us, Svi. The message of resilience is somewhat surprising, but really a positive message to build on. I'd invite the audience, if you have any questions, to please put them in the chat. But while we're waiting for that, I'd love to ask you about, what are the underpinnings of that resiliency? How much do you think that the federal government's wage subsidy support program for businesses has been a factor in keeping that resiliency?
Right, that's a great question. And in terms of the wage subsidy, it is being heavily debated right now. Some businesses seem to have tapped into the wage subsidy program while also delivering strong profits. But at the same time, for small businesses that have been hard hit, I think it did provide a way for them to keep their employees and conduct business operations. So it has been helpful on that front, and we have heard that from small businesses. But it is a very expensive program. And so when you look at the federal budget, a lot of that is coming from the debt is coming from the wage subsidy program. So it can't continue for a while. However, as long as the pandemic is here and it's really impacting those hardest hit sectors, the government will have to find a way. Maybe it's not specifically to the wage subsidy program, but for some way to keep supporting these businesses, or else if they withdraw stimulus too early, you could see a flood of bankruptcies, which we have not seen just yet in the Canadian economy.
Yeah, absolutely. And speaking of, the potential for challenges to businesses, you indicated in the graph that obviously hospitality, travel, tourism have been the major sector impacted. And as the restrictions begin to ease, that will come back. Do you think that that's going to come back all of a sudden, or do you see that there's going to be a sort of a slower growth as consumer confidence has to kick in?
Yeah, that's right. It's going to take some time for these sectors. Health concerns, they may not dissipate right away, especially as you hear news of vaccine mutations and people getting reinfected. Even if though the probability is quite low, it can weigh on people's minds as they consider taking vacation or traveling. And the thing here is that domestic travel might rebound a lot faster than international travel. And international travel, there's still some kinks to be worked out in terms of vaccine passports and whether that come into play and how does that even work. And that needs to be something countries need to cooperate on. So we might see a lot more people, from Toronto going to Vancouver and Alberta and Banff and that sort of thing. But in terms of crossing borders, that might take some time, and that would be a bit of a weighing factor on accommodation and food services.
The other interesting discussion that's taking place is the supply chain. In terms of some products, both raw and refined, just not being available. The supply is constricted, the prices are increasing. We've heard about lumber. People are now talking about the downstream effects of that for the products that are created from it. What are you seeing in supply chain issues? Is this domestic? Is it global? Is it here to stay? Is it a short-term deviation? What are your thoughts on the supply chain challenges that we're facing?
Right. It definitely is a global issue. It's one of the driving factors is this increase in consumer demand, with a lot of people, demanding various goods, everything from cars to computers. So that's the semiconductor shortage. And so with this overwhelming increase in demand, supply has not been able to keep up. We've done some research where we've looked at shipping containers. There's just not enough shipping containers to ship all of these goods all at once, and it's hard to produce some of these goods as well, some of these inputs, such as semiconductors. So I do think that these supply issues could last for a little while, because that demand is returning across economies as they reopen all at once, with the vaccine rollout accelerating. But after some time, so we're thinking into 2022, then we could have these supply issues being fixed, and then we would have prices also settled. But we could see some near-term inflation for sure coming from these supply chain constraints.
Right. And those supply chain constraints, do you think they have the potential to impact the infrastructure programs, both in the US since it's global, but also in Canada, which is, I think, part of the planned economic recovery efforts is to really make those infrastructure investments?
Yeah, unfortunately, yes. It could have an impact, and it could be a lot pricier than what has been budgeted, because raw material costs continue to increase. But the infrastructure plans themselves, they usually take a long time to roll out. So even though it's stated in the budget, we might not really see it come through until late 2022. And similarly in the US, it's in a negotiation phase right now. So we might just see those plans materialize in 2022 when we have less supply issues.
Right. Okay. We have a question in the chat. This is from Dan. There's been significant financial support provided by the various levels of government over the last year. So what's your view of bankruptcy rate, personal and business, once those supports stop?
Right. So fiscal supports have been really important in bringing down insolvency and bankruptcy rates, both for households and businesses. And in the budget, there was less, the government was aiming to provide less support, wean businesses and households off support through to September, November. But I do believe that if the pandemic, if we're still stuck in this pandemic sort of environment, and households and firms continue to need help, the government will provide it. And they've made that very clear in terms of their objectives through the pandemic, through the throne speech and the fall economic statement. And so we could just see a shifting of priorities away from some of these longer term spending initiatives towards, again, near-term supports. And I think this is what the government will do, because they're very keen on keeping businesses afloat, households afloat through the pandemic.
Okay, yeah. And there's another question from Dawn. So with the federal debt increase and no forecasted decrease in that debt, What's the potential for investors to lose confidence on our government's ability to pay back those funds and reduce the debt long term?
Right. So the government right now has pointed to debt servicing costs being quite low, and the fact that they can continue to roll over this debt. But I think it will be very important for them to remain committed to the targets that they have set, which is the declining debt to GDP ratio. And I believe one of the rating agencies, S&P rating, came out and reaffirmed the federal government debt status at AAA status. But the government will have to be clear in terms of not just opening up the spending taps and keeping to the programs that were announced. And I think they could go a little bit further in terms of any sort of windfalls that they've come across because of less spending or more revenue, to return that in terms of spending, paying down existing debt. And I think that will instill more confidence for investors in terms of Canadian borrowing.
Okay, terrific. Now we're talking sort of at a national level. We've seen impacts to local municipal governments in their budgets, and we're still seeing some of that roll through, both decrease in their revenues as well as the need to figure out how to deliver their services online. Do you think that that's going to have an impact in the economy?
So in terms of shifting services to online, I think that'll be important. I think that'll be positive, actually. And so this is one of the things that the pandemic, of all of its negative impacts, one area that it has accelerated is digitization, conducting business online. And that has allowed for more efficiency. And it's also allowed, it's pushed for the importance of having access to internet, broadband, for people to be able to conduct these businesses online. So I think it'll be important to increase that sort of infrastructure. Now, in terms of municipal spending and whatnot, I think, as the economy recovers, hopefully those strains go away. But as long as it's still there, municipalities will feel the impact as well.
Okay. I was surprised to see the difference in the recovery in Europe versus the US versus Canada. And so I'm wondering, does that present opportunities for Canadian businesses on more of the export market?
So on the European end, what we do know is that on goods, they have been recovering, right? On the manufacturing sector, Germany being a manufacturing powerhouse in that regard. Services is where Europe has struggled, and that is a function of restrictions as well as the pandemic. So there's less in terms of opportunities on that front because it's a function of the pandemic. But I do think that one aspect of this crisis is the shortening of supply chains. So when we come back to deglobalization, trying to make sure that you have secure supply chains, that you're not sourcing from areas that could be impacted by some crisis out in the future, I think there could be some opportunities there because countries are very keen now to make sure that any sort of manufacturing sort of supply chains that they have are coming from secure areas. So there may be a push there because you're being a strong ally and whatnot, that we could see some strengthening of supply chains from that end.
Sri, thank you so much for sharing these insights with us today. And I think overall, I'm taking away that very positive message of resiliency in the Canadian economy. And it's actually really nice to see those in the graphs, so that it mirrors that sentiment, but it really does show in the numbers. Thank you again for being with us today. And we hope that we continue to see that recovery as you forecasted.
Great, thank you. Thank you for having me.
No problem. That sets the stage for our conversations going forward. As you know, we're doing different panel sessions based on different industry sectors, talking about how those factors are actually being experienced in these different sectors. So our first panel is on manufacturing. And this sector in particular has experienced quite some volatility, and some of them have been, experienced lots of opportunities for growth, and others not so much. But we've also seen a lot of collaboration with industry stepping up to support national and provincial calls for assistance. And we're wondering what that future is in the manufacturing sector and what kind of automation will drive this going forward. So with that, I'd like to introduce our panel of experts. We have Daryl Sills, who's the General Manager of Canadian Operations for Celestica, Tony Guerreri, who's the CEO of Roma Molding, and Jamie Davey, Director of Tree Frog. So gentlemen, if you'd like to join me, thank you so much for being here this morning. I hope you enjoyed that conversation with Sri. I thought that was a really fascinating insight. And so let's get started on our panel. We're going to be monitoring the chat. So to our attendees, if you have any questions, please put them in the chat and we'll broker them. But Tony, let's start with you. How has your company, Roma Molding, navigated the impacts of this pandemic?
Yeah, good morning. I think you said it very nicely, and a great presentation from Shri for sure. Yeah, it's been a roller coaster ride. I think during wave 1, wave 2, and now wave 3 certainly has been a challenge. I think the way we've navigated in many respects is we've certainly taken advantage of some of the stimulus, from the both federal government that's helped us certainly during that first wave, which was very intense. And the lockdowns really affected us. But I think what we've done really well is navigating into the pandemic. We've always been a company investing in infrastructure, investing in technology, and constantly, in a continuous improvement type of mindset within our organization. And with rising costs and with rising labor costs, we were always doing our best to invest in how do we become more efficient. And some of the areas that we've done that within our own business, just in an effort to deliver a remarkable customer experience, was investments heavily into the website and web development within our organization. How do we make it easy for our customers, our partners, both in Canada and the US, to interact with us? So we've been building those blocks, before the pandemic hit, but obviously it's paid some dividends as we went through, what otherwise is a lockdown, and people physically can't come to see you. We've done, call center improvements and efficiencies through order entry. So we run SAP as an ERP system. So constantly investing in our infrastructure, primarily technology, to make life easier for the people who do work in our business. We spoke about, how do we get orders into our systems easier? And we're in the B2B space. So our customers, we sell to a retailer who would otherwise, sell to a consumer. And we're trying to act as if we were a B2C company and try to deliver that same type of experience that we've all come to experience, with the likes of Amazon and Wayfair and things of that nature. So we've modeled that. Although that's a B2C model, we model that within our business and are doing our best to emulate that user experience. So things like EDI, electronic data interfaces, which enable our customers to put orders directly into our system without having any buffer or anybody in between, gets orders in quicker. And that's just been phenomenal. And I think the other thing we've done is, we're a traditional manufacturing company here in Ontario, and we've been here for 37 years, but we've had to, in the last, I would say, decade, really reinvest and rethink our strategy. And now we build applications for businesses who otherwise use our products. So the analogy I use is we've helped build a machine, a coffee machine, and now that individual customer of ours buys the beans from from us. So if you could use that analogy, and it's worked really well. It's insulated us from the likes of different competitions, but also I think has some sticky power. We've built really great sticky power with our partners and really going deep. So not only do we deliver remarkable products, but now we look at ourselves as a technology company and how are we solving problems for them, enabling them to have better sell through at retail. And partners, that's I think what partners want to see, a true integration. And the more we do that, the better we do as a business. And yeah.
Now, Tony, you have clients that aren't just sort of local retailers. You're dealing with large national, multinational companies, and you're still doing that, or they still have that need for these sort of applications and ease of doing business?
Yeah, absolutely. So we deal with, a lot of mom and pop shops, local, regional, but we also do national chains, whether it's Costco or Ethan Allen or a number of different, large, as you said, corporate type of outfits. And both are taking advantage of it, obviously in different levels, but both have certainly taken advantage of that.
Right. So obviously continuing to invest in your digital infrastructure, both on the back end and the front end, were key to positioning you to be able to navigate through the pandemic. But what about the people in your company? How do you help them move along as you continually bring in new technology and streamline processes?
Yeah, that's an excellent question because change for some may be daunting, and what we do at our company, really, we're guided by our 10 core values, and our core value number 10 is all about innovation and growth and development. So it's ingrained in who we are as a company and culture. So it doesn't come to a shock that we're constantly, investing and constantly, raising the bar there. But we do try to do our best to do, to integrate them slowly, show the benefits of why we're doing what we're doing and how it will help them in their roles. And, quite frankly, I think everybody wants to do their job at the best they can do. And if you show them and give them those tools and make them part of that, the results are pretty remarkable. And obviously we do the cross training and things of that nature. But we try to ease it in and make them part of that solution. Right. And I think lastly, I think communication is very important. How you deliver why you're making these changes are in many respects more important than the actual change you make. And while we shut our company down 3 times a year and do a live all hands meeting, due to pandemic reasons, we can't have audience members, but we've navigated that and we pre-record that, but we still shut our company down 3 times a year to have a meeting and tell people what's going on within our organization. Mm-hmm. Not only, all the successes, but also where we failed. And certainly to talk about the pandemic, it certainly has helped navigate that.
Right. Daryl, you're the plant manager at Celestica, and you're a global contract manufacturer, so I'm sure you were already using lots of digital technologies. How has your organization responded to the challenges of the pandemic?
Yeah, thanks, Karen. Thanks for having me today as well. We've seen a large change in our business, obviously, given that we are a fairly large electronics manufacturer in Canada. We've seen our commercial aerospace business obviously take a significant drop with the market, the way the COVID has happened and the pandemic has affected us. But we've been able to pivot. One of the things we're really getting ourselves into now is into space. We see that as kind of the next generation of evolution of all the electronics, and you hear a lot about it on the news. And so we're heavily investing into, requirements to be able to build products out of our facility to support those initiatives. We've also pivoted into healthcare. So one of the obviously when the COVID pandemic hit, we wanted to support Canada and Ontario. And so we did start to, actually procure and manufacture ventilators at the facility. So that was something that we stepped up to do, and also feel that, that's an area for us to continue to grow in. So health tech is a big part of, the path forward for Canada and Ontario, and it's one of the reasons we got into it, and one of the things that we see, kind of lasting beyond just our ability to build ventilators. So we see us going forward in that path as well. So we've had to retrain people, we've had to reorientate ourselves towards these new sectors, but I think it's for the positive. Actually, I think our challenge that we came across with the commercial aerospace allowed us to open up and kind of redevelop our people, kind of position ourselves, and kind of see a new area of business that we need to move forward into. So I think that was a big positive step actually in the right direction.
That's amazing, and what a great example of how private sector partners with business with the government to really all hands on deck get through these challenges. As a manufacturer, large manufacturer, you have 3 shifts, 8 hours a day coming in and out of the plant prior to the pandemic. How have you addressed that? In terms of lots of people coming into the facility, what's that impact into your operations?
Yeah, life is different. So we still have our, our people on the floor that come in and manufacture products every day. But, we've staggered their shifts, we stagger breaks. We've done things like we've obviously got a lot of cleaning in the building going on. We clean the building top to bottom nonstop. We've rearranged our cafeteria. And one of the things we've also done, though, which I think is, something that is a positive again, is we've really deployed we have an automation team on site, about 5 individuals that continuously go through automation projects on our manufacturing floor. We redeployed them slightly to look at how they could support the facility. They've implemented door readers basically throughout the facility, so someone can just wave a hand. So every door is touchless. An employee can get inside the building just with their badge and the wave of their hand through the different sectors. So that's important to obviously prevent the spread of COVID. We've also had them automate our coffee dispensers in the cafeteria. So believe it or not, we've got foot pedals and we've got coffee dispensers. So people want to get a coffee, they don't have to touch, and have common touch points around the cafeteria. So we've done a lot of things like that. We've obviously got as well COVID screening in our front door to help us obviously ensure that when people enter the building, they're safe and their families are safe as well. So we've done a lot of that as well. And we've rearranged our cafeteria. I think I mentioned that, but we see a large number of people working from home, so we've supported them on that, and I think that's pretty much going to be the wave of the future. But we've got a large amount of our support staff that work from home, so we try to support that as well and keep going and keep pressing forward. But no doubt of a challenge. I'm sure a lot of companies have faced these similar challenges, and we've just tried to react to it as best we can.
Great. So Jamie, your company, Tree Frog Interactive, works directly with other companies and manufacturers to help them integrate and adopt digital technologies. So because you're right beside them as they go through this process, what are the common challenges that they're facing?
Thanks, Karen. There are a number of challenges that businesses face now and that they've been facing for eons. It's just really accelerated. One of the biggest ones I've seen is just acceptance of the change. It's a lot faster than individuals have thought, and adapting the business model has been difficult. So I think of a scene in Friends where Ross is trying to move a couch and he's yelling pivot and pivot. Companies have difficulty pivoting, and they have to, because the individuals, whether they're internal to the organization, so everyone's working at home, as Daryl and Tony have talked about, and others, and they're not around, but also the customers. Like, we can't go out and shop. So how do you pivot your business? Organizations are fearing change. And that's one of the biggest things, throughout the dawn of time. Fear of change is often something that holds people back. And our recommendation, and we're pretty open with with all of our current and past and present clients, don't be afraid to adopt change, and at least look at it and look at what is possible. Because that's what we find is a big challenge to them. They need to think. You mentioned it when we were speaking last. You have to think holistically. What's the experience you're giving your customer? And you have to change. And you have to be willing to look at change and change how you're interacting with them internally and externally. And that allows you to really adopt some new business processes.
Right. Okay. Now, the challenge of the front end and the back end. So we talked about front end before sort of being your website, and the need for people to invest in that website for experience. Can you share a little bit about that?
Yeah, that's I have an analogy that I've used. It's kind of funny. So when you're in the past, the website has sometimes just been you had to have a presence. But everyone's going to come in and see, walk into your store, or walk into your showroom. Now I look at it and everyone's online, mobile. That's the first point of contact. So I phrase it in a way that's somewhat humorous, but really, relevant. If you had a physical store and the door handle is broken and there's paint all over the wall and it looks like it hasn't been updated and the facade hasn't been updated in 30 years, are customers going to come in? Well, that's what we see. That's what customers look at your website now as. So when the experience you want them to the experience you want them to have, that's that's your new front door. So the other aspect of it is the back end. They want to be able to look at all their information. They want a lot more self-service tools that they just don't have. They can't go out. So you have to be able to integrate some of that information from the back end and pull it forward in a simplistic manner. And organizations, companies like Amazon have changed the game in the sense that it's not Amazon themselves, but the experience that they give everyone across the globe is now that new norm, that when you and I go buy a personal item, we expect the same thing from our business relationship. And that's really setting a new bar.
Right. So you're really talking about that consumer expectation, whether it's the end consumer or your business partners, they want to be able to transact in the same way that they do on those larger marketplaces. Well, taking on digital infrastructure challenges can be a bit intimidating. So how do you recommend companies get started? I think everybody has concerns about complexity and cost and change management and people issues. So how do companies get started?
That's a good point. The first piece is education. You want to make an educated decision, and there's lots of it out there. Find a trusted partner to help you navigate through that. So with the relationships that we have with our clients, we're very open. You don't need to come to a tree frog for everything, but you need someone to help guide you through all of this. You have to do it in baby steps. Organizations will say, I need to put a portal, I need to give all my information there, and I want to do configurators and everything in one shot. I'm like, oh, slow down a little bit, take it step by step. It doesn't all have to be done day one. And you can do incremental phases. And then you have to assess, just like we do a lot of marketing plans for organizations, and every month we review them because the landscape changes. It's no different with infrastructure. There could be a new tool out there that changes what you signed off on 6 months ago. So you always want to be adapting to new technology, and you do it in phases, and you do baby steps, and you work with a partner to help you through that.
Right. So going back to Tony's original point of it's really a process of continuous improvement and a journey as opposed to a destination in terms of your technology integration. Now, we touched earlier with Sri on the impacts to the supply chain. I'm just wondering if your company, Tony, has experienced that, and what are your views about the impacts to Canada?
Yeah, I'm happy you brought that up. I think I differ from Sri. I think his outlook is somewhat more optimistic than mine. Yes, consumer demand in some respects is up, but I think the restriction of supply is what's driving the costs to go through the roof, and it's been very daunting. I think we're in the wood business, so anybody who's went to a lumber company or Home Depot or whatever and is looking at the cost of a 2x4, simple 2x4, or pressure treated wood, which is probably, you're not getting it this year. And even the cost of plywood at $100 a sheet begs me to question the scarcity of that product. And COVID has created that back in the global chain of supply where, there may have been, 20 people on a job harvesting products. Well, now there's maybe 10. And like Daryl, like my company, like many manufacturing companies that have people, people still are getting infected with COVID-19. That's just a fact. And as quarantine continues to happen, people are off the assembly line or whatever the case may be. So where they would harvest, let's call it 10 sheets, they're probably harvesting 5. And now that 5 is up to bid at auction, and people around the globe are all trying to get those 5 where there used to be 10. And is there more consumer demand? I think in some respects there is. People are hunkering down. We're in a home improvement boom, simply because we can't travel, as you've indicated. Probably more travel is going to go out west than down south. And I think these supply chain issues are here to stay for some time. I know there's backlogs even in containers, but the movement of containers, you see the entire coast of California shut down. You can't get a parking spot for your container. So even if you have the product and have the wood, you just can't get it into the country. So I think the global supply chain is certainly disrupted. I think we've navigated well through this pandemic. We have great partnerships, like everything in life. It's about having the great relationships and partnerships. But even they're at odds in many respects to are limited to actual supply of actual raw products. That's my take on that.
So given that it really is a global market issue, from your company's perspective, how are you handling that challenge?
I think we're handling it because in many respects it's an auctioned item today. So either you pay the higher price or you just don't get product. I hate to make it black and white, but it's that simple. And therefore, Siri talked about the cost of inflation and inflation going up. I think that needs to be spoken about far more than it is in certainly in Canada, but also in the United States, which is a close partner of ours. Inflation is destined to really offset economic growth, because you can't raise interest rates and you can't print more money, because I think the printers are going as fast as they can. So, I'm at a precarious state to really understand how this is really going to fix itself.
Right. So from a detailed operational perspective, how has your digital infrastructure helped you with that challenge, in terms of figuring out either lead times or even just on your finances?
Yeah, I think it's twofold. One is I think we do a great job with procurement in general. I think we have good predictive analytics, and I think we're heavily reliant on that predictive data. And today that technology exists. 10 years ago, it probably didn't for companies my size. Maybe for Celestica it did, but not for our smaller manufacturing business here in Ontario. So we rely on that. Obviously, we rely on communication, like anything. I think our company today is much more connected day to day, because as you've indicated, things are changing day to day, month to month, and I think we're all more connected, and are communicating challenges and opportunities. Because I think we as a company have done remarkably well, all things being considered. But in that growth, we need teams coming together, colliding, understanding needs and wants and demand, certainly.
So Daryl, has this aspect of supply chain disruption been a factor for Celestica?
Yeah, I would say I'd echo a lot of Tony's comments, but yeah, we've definitely seen an impact of longer lead times for sure on components. We've tried to mitigate that through, as he mentioned, good predictive measures, good SIOP process, good forecasting, and we've tried to mitigate that. I'd say less impact in our new market facility, but globally, when I look around our company, definitely large impacts from the supply chain. But we've tried to get ahead of it as much as we can at Celestica, and used. We actually saw it coming a couple years ago, so we've actually tried to initiatives around that and tried to really forecast better. But definitely longer lead times. We got to plan better. We got to forecast better. We're already planning for basically almost next year at this point. So that's kind of the big thing for us. So it's it's a challenging time for sure, and you hear about it all the time in the news. So something where we always continually work through. So we use every predictive analytics we have, and as Tony mentioned, we've got a lot of different ideas and different capabilities internally that we try to use to solution us ourselves.
So you mentioned the news, and besides shipping containers, which have been on the news, there's also been a lot of stories about the shortage of chips and how that's rippling through different markets. Is that impacting Celestica?
Yeah, it is impacting us. Like I said, from a global standpoint, there's a lot of sites that are impacted. I would say less so, like I said, in a new market, but we are definitely having very We communicating with our supply base and trying to ensure that our supply continues to come through. But it's definitely been a challenge around the global business that we have at Celestica.
So when you look at the Canadian economy as a whole, natural resources has always been one of our core strengths. So when we talk about these supply chain shortages, why is it that we have these challenges, and what can we do about it going forward? Do you have some views on that?
Yeah, I do. I think, traditionally we've been a country where we kind of export some of our natural resources. And I really think, part of the things we can all do is, really try to strive towards just creating more manufacturing in Canada and Ontario. I think bringing jobs into Canada and Ontario, creating our own sort of positive movement forward, I think would be the right step in the right direction. I think we tend to outsource and we tend to ship a lot of our raw material offshore. But so yeah, I think we need to be more self-sufficient as a country.
So not unlike the whole ability to produce vaccines here as sort of infrastructure for the future. Maybe we need some of those refineries for the raw resources going forward. So there's an opportunity for Canada. Jamie, what's your biggest aha from helping companies as they've navigated through this pandemic? Like, what's been your biggest insight and takeaway as you work with them side by side?
This is an interesting one. So as we know, end consumers have spending habits have changed. How they buy things has changed, and organizations have had to adopt. So when we look at manufacturers and traditional resellers in the B2B space, in order to stay competitive with each other, they've had to streamline their back end to their front end. Their ERP needs to connect to their sales order process and shipping, connecting all the way through to that front end website to do e-commerce or supported dealer portals. So the biggest aha moment for many that I've spoken to is, well, I've got this infrastructure and Best Buy is buying these electronics from me. Who's to say that Best Buy can't be Mr. She or he, Joe Q public? So manufacturers are now, in the past, and I've been in the channel game for some time in previous lives, the whole idea of selling direct and selling channel is difficult. Now the processes are there that it doesn't necessarily matter who's buying from you. So the biggest aha moment is they've got the infrastructure, new sources of revenue are now aplenty. And it's an interesting discussion to see which way various organizations go with that.
So in addition to the impact of moving online, you're saying channels to market are being reshaped as a result of the pandemic as well?
Yeah, because consumer spending has changed and the infrastructure is there. So there's nothing stopping someone from selling direct, given that they're buying no differently than if you're buying one or buying 10,000, maybe the shipping costs change, but the order process and order fulfillment is all the same. Doesn't matter who's on the end. And I've noticed that, I mentioned Amazon earlier. I've personally seen a lot of my manufacturers and a lot of my clients go to Wayfair to start selling directly. Best Buy, if anyone's purchased on Best Buy using the Best Buy online portal, half the stuff there isn't sold from Best Buy. So it's amazing. The whole landscape has changed, and that's the biggest aha moment for businesses.
So how do they take advantage of that? Is that sort of a business strategy conversation separate from digital infrastructure and all that? Is that like rethinking their business plan?
It does take a lot of thoughts and decision making here, because you don't want to jeopardize business relationships you have. A lot of your customers, if you're selling to a reseller, don't appreciate you going directly to their end client. So that's a huge landmine that some organizations I've seen have looked at and some have stayed away. But you have to have the infrastructure there. You have to have the back end interconnectivity. You have to close the gap between the ERP and that front end website. So you have to have the infrastructure to really even effectively go down this road, because technically you could have done this before. But if you have the infrastructure, you have the investment and technology in place, then you have to have the business conversations to support it or decide not to do that.
Right. Well, that's our time, gentlemen. So I want to extend a sincere thank you to all of you for participating today and sharing your insights. I think this is a really fascinating conversation, and look forward to seeing what the future will bring. So thank you to Daryl Sills from Celestica, Tony Guerreri from Roman Molding, and Jamie Davey from Treefog. We really appreciate your time.
Thank
So
you.
our next
Thank
panel, our next panel is going to focus on our future energy needs. Now, environmental concerns are in the forefront of any discussion on economic recovery. And as climate issues and sustainability issues dominate the public conversation and drive policymakers to look for solutions, oil and gas companies are adapting and investing in solutions towards a carbon neutral future. And to learn more about this, I'd like to welcome our panel for today. Mac Van Wielingen is the founder and chairman of Viewpoint Group. He's going to moderate the panel. He's an investment management executive, corporate director, entrepreneur, and philanthropist, and the founder and chairman of the Viewpoint Group, a private group of companies, which includes the Viewpoint Foundation and Viewpoint Investment Partners. Rona Del Freri is the Chief Sustainability Officer and Senior Vice President for Stakeholder Engagement for Cenovus Energy. Rona works to ensure that environmental, social, and governance considerations are embedded in the Cenovus strategy and business plans. And she's also responsible for leading the company's communication efforts, building strong relationships with internal and external stakeholders. And we have Scott Dodd, Director of Business Development from Enbridge. And Scott is responsible for identifying new business opportunities in Enbridge's service territory. Prior to his current role, Scott was the Senior Project Director for Major Projects, responsible for planning and executing major construction projects for Enbridge and its affiliate. Scott has provided leadership for over $4 billion in projects, delivering over 1,500 megawatts of wind and solar projects, and over 400 kilometers of gas and electrical transmission projects. So this is a powerhouse panel of experts. It's great to have you all here. I'm really looking forward to this conversation. Mac, I'll turn it over to you.
Okay, well, thank you very much, Karen. And it's a pleasure to be here this morning, and it's a pleasure to actually to be with Scott and Rona as well. I'm going to jump right into it. What I want to do is offer a context for our discussion this morning, and I'm going to be making 5 key points very, very briefly, and then we'll get into the discussion, and I'll ask each of Scott and Rona to similarly start off with some summary points. But the first point is a little bit of a surprise for a lot of people when they're looking at the oil and gas sector in Canada. There is this view that the oil and gas sector was truly hammered to the ground in 2020, and that view is right. But there's been an enormous recovery, and it's important. It's very, very important to see this. It's unmistakably in recovery, and the best marker of recovery, I would argue, is cash generation, and that's the best marker for financial health. And looking at the aggregate industry, we're calculating at ARC Financial, and as part of my background, I would mention as well that I'm the founder and partner of ARC Financial. We're the largest private equity investment management firm in Canada, focused on the energy sector. So, we're all over this detail, but the industry will generate this year, we believe, $70 billion of cash flow, which is quite extraordinary, as it's a record high. It's even higher, slightly higher than 2014. Oil sands, $40 billion is what we're expecting for this year. And it's interesting for the oil sands that the capital expenditures are quite low for maintenance and for sustaining production. So against that 40 billion is $5 to $10 billion of capital. If you look at first quarter results for a number of the major companies, you can see there's been an extraordinary swing. 6 companies that we looked at, and I won't list them off here, but Cenovus was one. Just aggregating the numbers, they had a $7 billion loss in the first quarter of last year, and this year a $3 billion generation, positive earnings. And stocks Oil and gas stocks have also been on an incredible recovery over the last approximately 1 year. And so one of the questions I'm going to be asking Scott and Rona is how they see recovery in their own businesses. Now, the other piece, though, I think that's very important to see is what I refer to as risk retrenchment. So there's this cash generation, but the priority for spending is going to repair balance sheets, paying down debt, creating more internal liquidity, reducing risk, returning cash to shareholders. There's no question that that's the attitude right now within the oil and gas sector. And it's for two principal reasons. One is the shocking downturn in 2020. And it was so extreme, and it really got to the issue of survival for a lot of companies. And the other that I just want to note here, and I just want to just be very open about it, is continuous activist and policy hostility towards the sector is discouraging, to say the least, to those who are responsible for managing capital in the sector and reinvesting capital. And so similarly, I'll be asking Scott and Rona if they want to offer any comments on that perspective of risk and the reduction of risk. The third point is with respect to the energy transition, which is much discussed. If you go through the numbers really carefully, look at all the data, and you see where it is that that transition is going to occur, how it's going to occur, what aggregate demand levels are going to look like over a long period of time, it really looks to us more like evolution versus transition. It will be multi-decadal, and I often think even multi-generational. For Canada, it's a strategic challenge as to how we maintain our market share in oil and in natural gas in export markets, as well as within our own country. And so there is that challenge, but that is, for me, is the best way to frame it, is how are we going to respond to the eventual long-term plateauing and decline of oil demand? And how are we going to compete? And competing on ESG and on emission reductions is critical. In a sense, we're competing on carbon. And that's my fourth point, is if you look at Canada's ratings on ESG globally, we are, I believe, and I say this publicly regularly, and again, we're on top of all this data, which I don't have time to talk about, but we believe an energy and resource ESG achiever. And when you compare us to other energy and resource suppliers, when you compare us to all the largest oil suppliers in the world, of which we are one, we rank right at the top. And there's a lot behind that. And this industry has been incredibly responsive to pressure. And over the last 10 years, this is nothing new. And so we need to continue to move to reduce emissions. That's the critical issue. And I often will say, break the back of the emissions challenge. And we need to do something material and strategic. And I believe that we will. The last point is with respect to the economic importance of the industry. And I know all of you would have heard a lot of these statistics before, but I'm in the investment management business. And so we're always looking at, like all of you in developing your own businesses, you look at your business and you ask yourself, well, what product or what business line is creating the most value for us? And then you're prepared to invest more in those products or those business lines. Well, you can look at the entire economy that way and say, where has the value creation been? Where is the value creation now and going forward? And the point about the oil and gas sector that's often missed is 80% of our crude oil is exported. And about 45% of our natural gas is exported. We had a profitable opportunity that attracted enormous amounts of capital. The industry historically, cumulatively, has invested $1.2 trillion. And that capital, and that with technology and Canada's know-how, we were able to scale up. And a lot of people talk about the value of scale up. Well, the best example I can point to actually is our oil and gas sector. We scaled up the industry relative to labor as an input. And consequently, we have the oil and gas sector in Canada is the highest value add sector to our economy. What's key as we go forward, and I'll stop on this, is being able to compete on these new fundamentals of carbon and ESG, and to position ourselves on the basis of those fundamentals and our resource as a global leading technology-driven, ESG-driven energy and resource supplier to the world. Now, I'll thank you, and I'll turn it over to Scott or Rona to offer some of their perspectives. And Rona, do you want to go first?
Sure, I can go first. Yeah, thanks for that setup, Mac. I agree with all you've said. We are living in an interesting time, and I think for the energy industry, you can say that it's always an interesting time because there's so much change in this industry. I've been in it for about 13 years, and until I was immersed in it, I had no idea of the complexity of this business. You know, most people think, well, you pump the oil out of the ground, you send it through, eventually it ends up in my gas tank. And it is a very complex, very high-tech industry. And so, you know, this last year I'm going to be an optimist just like you were, Mac. This last year has really just set us up to be an even stronger competitor globally. Because boy, was it a year. When you look at the difference from right now where we sit with just the price of oil compared to a year ago, it has changed drastically. And what that did is it made our companies even stronger. And so, you know, we always talk about how are you going to be a successful global competitor as a Canadian oil and gas company, which Cenovus is. You know, we have very large oil sands reserves and assets, but we also have conventional oil and gas and refining and upgrading facilities. And so I always look at it as in threes. You have to have a low cost structure. And so that's both capital efficiencies and low operating costs. You have to be able to be the best leader in sustainability. And as you referenced, our companies are among the best. You're not going to go anywhere else in the world and find better ESG performance than you are right here in Canada for the oil and gas industry. And then you also have to have a strong balance sheet. And that's what's been important over the last year is really getting a handle on our balance sheets. Now, for our company, we went through, besides all of the challenges that we were facing with COVID and market fights last year between the Saudis and Russia and everything else that turned the price of oil upside down, Cenovus also went through a major transformative transaction as we purchased Husky Energy, and that deal closed on January 1st. And so, you know, we really feel that the scale that brought us and the diversity that brought us to our portfolio has set us up in an excellent way. And we're focused right now on, you know, we acquired more debt with that transaction. We're focused on paying down that debt this year to a level that we feel will be manageable. And with the prices right now, WTI just look mid-60s is what we're expecting over the longer term. That places us in a very good spot to, as you say, Mac, bring in cash flow. And that's where I think a lot of the people in York region, especially, that's what they're looking for. Because once we get our balance sheet to a point where we're comfortable, and we do think we're going to get there, you know, this year and into next year, then that's when we're going to be starting to look at reinvesting. So we're giving some returns to shareholders. They haven't seen as great of returns over the last year or so, and reinvesting in the business. And again, before I turn it over to Scott, I'll say a reminder to everybody, you know, the oil sands business in particular is unique globally because we know where that resource is. We do not have to spend all that risky money going out and finding it. We know it's there. We know how to get it out of the ground. And once you get those projects up and running, they're big projects to get built, but once they're built, they will produce for decades and decades and decades at very low sustaining capital costs. And that's what a lot of people miss about the Canadian industry. That is a huge opportunity for returns. And so I think I'll be quiet for a moment and turn it over to Scott.
Yeah, and I really appreciate your emphasizing that last point that's so unique to the oil sands, because in conversations with people, I similarly try to do that, and it's not necessarily widely recognized. But Scott, over to you.
Yeah, thank you, and good morning. And I guess, Enbridge is known for a subsidiary, which I work for in Ontario, Enbridge Gas, primarily in York Region, and I actually live in York Region. But we also have three other divisions. We have a renewable energy division that has over 2,000 megawatts of renewable energy. We have a natural gas pipeline division where, approximately 20% of all natural gas, piped in North America, it goes through one of our pipes. And we have a liquids pipeline division, which primarily connects the oil sands to the US markets. And, approximately 25% of all crude oil in North America goes through our pipelines. So we're the people in the middle. We try to, match producers with consumers, and we deliver it where they want it. And, our business is certainly been changed. It's not as risky as an upstream producer. In Ontario, we've certainly seen mixed results with our gas distribution, depending on, as Sri, the economist from TD said, depending on which, sector you're in, that determines how you were impacted and how much natural gas you use in Ontario. Residential, we have 3.5 million residential customers. It was slightly warmer this winter, so that was a reduction. But, other than that, residential has been strong because a lot of people have been home. So from that perspective, but, our challenge will be going forward. I think advertising our ESG credentials and continuing to deliver value to our customers and matching the producers with the consumers and delivering the energy that they want and need. And that means we have to focus also on decarbonizing, and we're doing a lot of work in that area to help our customers decarbonize as we go forward. But I think, as we'll talk about a little later, it's more of a marathon than a sprint to get there. And we're going to do it gradually, and we're going to do it effectively, and we're going to try to do it with the least cost impact to our consumers. And I think that's our challenge, is balancing, all of those things so that we can continue to deliver energy, which people need. It's a vital, it's almost what you would call a requirement for life in this world is energy. And as you get richer, and as countries expand, they require more energy. So we need to find ways to deliver that much more effectively, and that'll be our challenge going forward. I'll turn it back to you, Mac.
Okay, well, Scott, I just can't help but think when you were speaking, people in our audience were wondering about line 5. And so I might as well get it right out there and see if you can create some context and perspective for all of us this morning.
Yeah, line 5, certainly happy to give you the high level context. And if anybody wants any specifics, they can certainly call our investor, our media line for the specifics. But line 5 basically goes from Duluth, Minnesota to Sarnia, Ontario. It delivers, and it goes across the US, on the northern tip of the US, down Michigan and into Sarnia. And in the US, it crosses, certainly the Straits of Mackinac, which is the focal point of everybody. And it delivers about 500,000 barrels a day of crude oil into Sarnia. A further 300,000 of that is sent on to refineries in, Ontario and in Quebec. So, it's a key critical element for Canada. And, we've worked with people there. It's operated safely for years. It's a 30-inch line. We recognize the concerns over the Straits of Mackinac. We've offered, and we're working on building a tunnel so that it'll be underneath the lake. And there'll be no issues going forward. And we're working with the parties involved to try find an amicable settlement here. Obviously, the governor of Michigan has a different view, but certainly we will continue to work and try to work to find solutions that work for everybody.
Okay. The perspective on risk, Scott, would be very, very different for your business, Enbridge, as compared to Cenovus, or the upstream industry. And just given the nature of your assets, the stability of your assets, the stability of your income stream. So you probably didn't feel the downturn as much as Rona and her team would have.
Yeah, I think that's fair. Most of our business is, fee-based. You use our system, you pay for it, and they tend to be long-term contracts. So work to, build the systems that people need and then deliver the energy they need through those systems under long-term contracts. So we tend not to have the fluctuations that you would see in an upstream producer, that's for sure. But I think, as projects are tougher to build, you're seeing more risk associated with building that infrastructure.
Yes.
And that's a challenge that we all face, because you want to have the lowest cost infrastructure in order to have the lowest prices to your consumers.
Yeah, I mean, and there's some observers saying that we're not going to build any significant new pipelines in North America moving forward. How do you respond to that?
Well, I think the challenge will be to find projects that make sense for everybody. They meet the ESG needs. They meet, the requirements of the producers and the customers. And and you may be building in the future hydrogen pipelines, or natural gas pipelines that can blend hydrogen as you go forward. So it'll be an evolving story. But I think you need to work with all stakeholders to find ways to make it work, and you need rules and policies that are transparent and allow you to make those long-term investments necessary.
I sometimes wonder, with respect to hydrogen, if you're building a pipeline and you're moving hydrogen, and when hydrogen is used, there are no emissions, just no CO2 emissions, just to make sure that everybody knows that. But so you build a pipeline to move hydrogen. I still sometimes wonder whether the anti-pipeline community will get after it and attack it and try to resist it.
Yeah, I mean, that's certainly a question that's out there. I mean, from our perspective, we look to build assets that are needed. So we would hope that the approval process would be robust enough to allow us to build those infrastructure as required.
The public activism against the oil and gas industry is, I think Rona's probably heard me say this before. I think if you look at it over a number of decades historically, the oil and gas sector perhaps hasn't been sensitive enough to the public as its customer. It was much more driven technologically and from an engineering point of view, and get the stuff out of the ground, process it, keep your costs down, protect the environment, but not necessarily tuned in to the public as our customers. And my experience is that has changed. Rona, can you offer some comments on that?
Yeah, I agree. This industry never really paid that much attention to talking about the good practices that we have, because to be honest, everybody took it for granted in this industry. We do the right thing. We're Canadians. We produce our oil and gas. We have strict regulation, the strictest in the world when it comes to, how we have to report, how we disclose our emissions, our water use, our land use, everything else. And it was kind of just like, let's get our heads down. Let's keep doing our job. Let's keep doing it by making sure that we're the best when it comes to the environment, that we work really well with local communities and especially Indigenous communities. I mean, we're the largest employer of Indigenous people in this country, many more stats that I could give you there. And we didn't brag about it. We're Canadians. We weren't beating our chests and saying, look how great we are. Look how much we've reduced our water. For example, Cenovus alone in our oil sands operations, we've reduced our emissions intensity by 1/3, and we have an ambition to get to net zero emissions. We are absolutely focused on that. But it's not something that we talked about a lot. Our Christina Lake oil sands operation, which is a giant oil sands operation, it's our largest one. The emissions intensity from that operation is lower than the global barrel emissions intensity.
Yeah.
But we didn't talk about that enough. And now we're at the point where our investors are saying, we want to keep investing in you. We know that you have the strongest ESG practices. Please talk about it more so that we can talk to the people that we're getting the capital from and explain to them this. We're hearing it from government officials too. I mean, if you were listening, our finance minister, Minister Freeland, said to the media a couple of weeks ago, our entire economy is reliant on the energy industry. And so for us to be able, she knows, and the government knows, that for them to be able to achieve their very ambitious GHG and climate commitments, they need our industry to be part of that. And we want to be part of that. We want to get to net zero, because if we can be producing our oil with zero emissions, then why the heck wouldn't it make sense for Canada to be the supplier of choice globally for our oil products? And
Right.
we are working with our peers. We are working with the government. We're working with people that are in this audience right now to come up with some of those innovative technologies to get there. We can do a lot on our own. We can't get to net zero on our own. We need the collaboration of everyone here, and we're committed to that.
Well, those are excellent points. I just want to pick up on one point, Rona, and that is about energy intensity. And you and I have talked about this before. I have found that a lot of people don't really appreciate that energy intensity. The concept sounds like a nuance and it sounds very technical, but they don't really appreciate it fundamentally. And particularly for ourselves as an exporter. And it's exactly what you were just saying. And that is that if we can export energy products into other markets and at the very least do no harm in terms of emissions being generated in that market, and in fact do better relative to other products that we're competing against, that should create a competitive advantage. That's why the industry focuses so much on energy intensity. But it feels like a nuance or some kind of a trick, and but it's fundamental to our strategy to be able to preserve our position in export markets.
It absolutely is. I mean, this nation is blessed, as we all know, with natural resources, blessed with them. We have so many reserves of natural gas and oil. And so when you look to countries that don't have those same reserves, and you look to countries like China and India and others that are continuing to grow, and their people deserve to have the same standard of living as Canadians do. But there is so much opportunity there to replace some of those coal-fired generation plants with natural gas. The natural gas that is coming from Canada, we should be sending it there to help globally. Climate change is a global issue. It's not based on countries. It's a global issue. And so any way that we can spread our products globally, and I don't just mean the actual products, but I mean the technology that we're developing. Carbon capture and storage. Why? We have been a leader in carbon capture and storage for years. We've been doing it in Canada for years. We know how to do that. So why are we not sharing that technology more broadly? And that's just one example of the type of technology. That is what is going to set Canada apart. And that is where we can show true leadership globally when it comes to climate change. And again, I also don't want to forget the Indigenous opportunities here.
Right.
Wow. I mean, our company alone, prior, not even counting the Husky side of it, we've spent $3 billion working with Indigenous companies. And those companies are bringing their game. Those communities want to be part of this strong oil and gas industry in Canada. And there is opportunity, and they are strong partners for us. So I never want to leave the discussion without that.
Well, thank you for referencing that. And as we move towards wrapping up here, I'd like to ask Scott to make a comment as well on this point you're making about the interest that Indigenous groups have, the Indigenous peoples have in resource development. And an impression was developed over the last few years that somehow the Indigenous people are all standing together opposing economic development and energy resource development. And the truth is anything but that. And Scott, can you offer some views on that?
Yeah, sure. So similar to Rona, we have, worked with Indigenous communities all along our right-of-ways, all along where we work to try, develop employment opportunities, to work with them for economic development opportunities, and we will continue to do it. Just as Canada is a diverse, group of people, so are these Indigenous communities, and we work with many of them, and some of them have chosen different paths, and we can certainly work to respect that, and we'll try to work with them as makes sense. But there's incredible opportunities out there. I think, from our perspective in Ontario, as we build out our pipelines and build out our distribution services, we look to work with everybody and try to bring everybody up as we build out and take advantage of this, this great resource that we have.
Okay, well, I think that's it, and I'm actually quite proud of us because it is 8:40. If for no other reason, I'm proud of us for being right on time and punctual. So, Karen, can I just turn it back to you, please?
Absolutely. And thank you so much, Mac and Rona and Scott, for leading that conversation. Lots of great insights there. And I think all of the messaging aligns with what we're talking about overall in this conference, which is the fact that, Canada's economy is resilient, that we are blessed with natural resources, but we have to figure out how to harness those to drive our economic recovery and our growth. But we have the opportunity to reimagine how that's done. With a little less reliance on our outside markets for the processing piece, and really looking at those opportunities for employment and stability. So thank you so much for sharing your insights. It was a pleasure to have you on the Zoom call today. So thank you.
Okay.
And our next panel is going to look at the future of infrastructure, in particular digital infrastructure. And I'd like to invite and welcome Ted Malucci, who's the founder and CEO of Smart One, and Laura Bradley, who's the executive director of YorkNet. We know that for an innovation-driven economy, digital infrastructure is going to play a key role for our resiliency. And so I think Laura and Ted's insights will really help us understand that. I mentioned Laura as the general manager of YorkNet, which started operations in January of 2018. This is a network that's owned by the regional municipality of York, which supports and services municipalities, but also collaborates with private sector companies to expand network reach across York region. Ted, as I mentioned, a founder and president of Smart One. Prior to that, he was the CIO of Tridel Corporation for 26 years, and he has been active in the York region area for a long time, speaking and providing insights on municipal broadband and smart cities. So he's a true innovation champion. He's been recognized with the Queen Elizabeth Diamond Jubilee Medal for promoting Canadian innovation and the Citizenship Award for the Professional Engineers of Ontario, among others. So welcome to you both. It's fantastic to have you here today, and I'm really excited to start this conversation. So I wanted to maybe start with Laura. YorkNet, as we mentioned, is building out the municipal broadband network here in York region. How have things changed sort of pre-pandemic to now, and where are you seeing the emphasis and importance going in the future?
Well, thanks, Karen. I think that, I think for almost everyone in this province, if not across the country, the pandemic has really changed the perspective related to connectivity in general, and of course, broadband being the leading component of that. And I think that it's, we often refer to online education, but it's the whole aspect of people working from home, online education, advanced healthcare in many areas that have changed and shifted during the pandemic. And I think one of the main differences is that people are becoming more comfortable with using the technology and the networks, but it's also highlighted the perhaps deficiency in some networks in terms of what we have and what we don't have. So the good news is the Ontario government and the federal government were both considering granting opportunities and funding programs to help further broadband networks, something that's been ongoing actually for the better part of 10 or more years. But I think that their position relative to the pandemic forced them in the last 12 months to make some shifts and changes. One of the important things is we've seen two real dramatic changes relative to the impact of the pandemic and work from home and online schooling specifically, and that is the reliance people have on their connectivity just to get through some daily activities in life. And there were two studies done by different independent companies. The first one being the Canadian Internet Registry Authority, called CIRA, And they did a performance test that looked at pre-pandemic speeds that they were monitoring and post-pandemic. And their first outputs came around summer of last year, so around June, July last year. And what was really interesting was the contrast across the country, really, between urban and rural. And what they noticed was that in urban centers, the average bandwidth per customer about doubled. So it went from roughly about 25 megabits per second download to about 50 megabits or more per second download. But that the rural didn't even really increase 10%. It basically started at just over 5 megabits per second download and finished at just under 6 megabits per second download. And I think what that really tells us overall as both York and the province is that rural areas lack the infrastructure to be able to adapt quickly, where our urban areas had that infrastructure. So primarily, carriers responded very quickly by upgrading what I would call their back ends, their gateway sources, where they get bandwidth and how they could pump it out. But when you don't see that same dramatic difference in one section versus another, it's a lack of infrastructure. I think the other component is what we call the upspeed. So as many people know, and in environments like this with Zoom, sometimes people are turning their video off, not just because they don't want to be seen, but because if they don't turn off the video, the actual performance of the overall connection is not very good. And it's because of that excess consumption. So I think those are some very telling tales that many of us were pointing to, but that the pandemic really fueled in terms of observance for everyone, and especially our government entities. And the good news is that both the Ontario and federal governments in the most recent budgets of 2021 increased their allocations to broadband funding programs to enable more connectivity. But I think, as Shri pointed out very adeptly, we must be always cautious to believe that infrastructure funding takes time, I believe were his words. And while many of us are eager to get started to build those networks, we have to be cognizant that they do take time to build, and that even some of the other aspects you talked about with manufacturing, like the increasing price of materials, those are all going to come into play over the next several years as we try to actually implement programs.
So Laura, we've touched on how businesses have moved to digital, and we also touched on how people are moving out of urban areas into rural areas. And you've highlighted that there's a disparity between urban and rural connectivity. So what are the business impacts of that disparity? What are you seeing in terms of ability for businesses to move and grow?
I think we're seeing the same problem that we've actually heard, especially even with York Region communities for a number of years, which is people, to your point, have more interest right now in moving to rural or more rural locations because it's perhaps their future work environment can allow them to be settled in those places, or they can move their business there. But the primary consideration when they go to make that move will be whether or not they have good connectivity. And that's because so many fundamental communications, as any business owner is fully aware, your interactions with suppliers, your interactions with your clients, those aspects, especially as we move to a heavier reliance on video communications, which are now much more predominant than they were pre-pandemic in terms of tools like this Zoom or Teams or there's a number of them actually operating right now, Discord. That's changed, I think, how people commonly will interact in their day-to-day, and then obviously take with their business. So I think there's still an element related to reliance on the connectivity that will inhibit in some places businesses actually moving and settling until we can make sure that there's adequate connectivity there to support that business growth and look toward the future of a much more dynamic and sustainable connectivity platform.
So this is really a key piece for our future prosperity and growth, is to get that infrastructure done as efficiently and as quickly as we can.
Yes.
What would you say the biggest challenges are with respect to businesses and digital infrastructure in terms of, let's say the infrastructure is in place, and how, what are the challenges businesses will face in leveraging it and making full use of it?
I think there's a couple of pieces. I think we can talk endlessly about the actual infrastructure itself, but I think the reality is the infrastructure can be in place, and then we have an expectation often that people will know how to use it. And as a small business owner, I can tell you that that's not always true. Small businesses are very focused typically on, or even medium-sized business, on doing what it is they do best, which is the core directive of their business. And utilizing the tools and always having the skills to embrace the digital world may be lacking. And I think that as we look toward building out infrastructure, we should be looking towards building out skills, interactions between maybe skilled parties and those businesses that might need access to skilled parties, in terms of helping them either move their businesses, as I heard some of the manufacturing talking about moving to a digital online world and changing how they interact with customers, say. I think there's more than that. I think there's a whole skill level reliant on how to use those tools. And I think that those tools become much more sophisticated very quickly, and it makes it very hard for the owner to maintain those aspects. And then future things like the Internet of Things, which may dynamically not just change how municipalities operate in their business, but can certainly also affect, the more average business in terms of what they're doing.
Right. And I think we did see, the government programs like Digital Main Street start to come out. I think they've recognized that as a big area, gap area that needs to be supported. So certainly it's nice to see those programs start to roll out, and hopefully businesses can take advantage of them. I'm going to hop over to Ted now. Laura's described the broadband network and how it supports internet connectivity, but you also see opportunities beyond fiber-based networks, and in particular recognizing Canada's massive geographic area. And 5G is one of those areas, but it's also something that's somewhat mysterious and the focus of a whole lot of conspiracy theories. So can you demystify 5G for us and tell us what it actually is?
Sure, I'll do that. I mean, I do want to kind of bring 2 points. I think we're all in alignment on the one is like how important this infrastructure is. I mean, I think that's a key thing that like a lot of people don't see it. Like if you think, and I always give the example, the turn of the century, building a railway across Canada, they did that because they knew that would drive the economy, it would have all these benefits. And I think that's so fundamental when it comes to getting fiber infrastructure. People need to understand this isn't just about internet at home and browsing movies. This is the efficiency of every single business in this country. This is the efficiency of our nation, right? So this is like so important, but people don't look at it that way. They always think about the end parts. They don't think about this fundamental strategy piece. The hard part for me in Canada, and I'm going to talk a bit about this in 5G, obviously we've got a huge country to cover. What's the right strategy to get that fiber out there? Like right now, you look at like on the same street, you'll have 2 or 3 providers with separate pathways. It's like creating 3 roads on top of each other, one for this type of car, one for that type of car. We're not efficiently using our money to spread the country. And that's a whole other discussion. And I think, you could look globally because different countries have chosen different things. But anyway, that was my soapbox at the beginning, just to say, yeah, this is important, but we could do better. And, we all complain that we pay too much for telco services. Well, the reason is there's a huge country to cover with low density. There's no way around that. And it's going to come up now when I talk about 5G. So let me bring up 5G. Because 5G is really the extension, like we connect the home with fiber and we create those networks. 5G is now the future of, let me connect everything that's everywhere. So what is 5G? So a lot of people think hey, it's this magical thing. It's solving all the world problems. It's fantastic. But so what is 5G? 5G is a fast network. It's low latency, high bandwidth. So it can transport a lot of information very quickly without delay. So why does that matter? Well, why does it matter would be is like a lot of people see self-driving cars. To really do a self-driving car, the cars need to speak to each other. They're not just like looking and independently working. To hit true self-driving cars, you need this. So that's where 5G comes in. Also, if you were to think about law enforcement of the future, where someone's carrying a camera and needs to upload video or create a connection, or I'm trying to deliver health services, you can see why these fast networks, low latent, like this is what we need. This is the only way, and like this is again that fundamental of to create efficient cities, we need to have these networks. So this is the fiber network that connects everything through the city, not just the home. Now, what's the problem with it? Well, the problem with it is everybody thinks that because it's 5G, it's better. It is better for those other two reasons, but why it's not better is because to be high latency, low latency and high bandwidth, it's using higher frequency. The transmitter of a higher frequency doesn't go as far. So now all of a sudden you need twice the number of transmitters, right? So you need double the infrastructure to do 5G. So I've been at conferences before and they say, well, why is Canada or North America paying so much for their cell service? It's because we keep going bleeding edge and the carriers have to pay for this stuff. So as much as we don't like the big bad telcos, these are really big investments, but those are really big investments that are important for Canada. Now, the other side of 5G is that it doesn't penetrate buildings. Right? So that's the other side that's going to be a downfall in the future. We're going to need to start putting infrastructure into buildings. Now, as I explain what the infrastructure is, does this really help rural communities? Well, not really. It wasn't designed to spread huge distances. It's meant for short transmission. So again, we get back to where we started with this. Let's get as much fiber into the ground as possible.
Okay. Well, can you talk about what's next for businesses and communities? You talked about getting connectivity into the homes, and Smart One is doing that with connected sensors and devices. Can you help us understand what that next evolution is going to be?
And that next evolution is like, you know, when we think about fiber hitting the home, we're thinking about internet. But we have to understand internet's not really a thing. It's a service on a network. So fiber is networks. So why do networks matter? So now I've put a good portion of my career towards smart buildings. And I actually volunteer a lot of time in smart cities. Well, where's the parallel? Well, a building is a lot like it's a metaphor of what's possible in the city, right? So really what I look at is what does a smart building look like? Is, well, I have all these smart homes. I now network them together. They're able to connect to a common network and I can do things with that. So let's talk about what it looks like in a building. And then you can see that this is the extension for the smart city. So once all these people are connected together, they're all now looking at the same app, which is useful. So now we can communicate to everyone. They can actually see security cameras throughout their community. So now they've got this neighborhood watch security feature. We're able to embed things like, now we're able to connect the HVAC systems of all the homes. We can optimize the energy performance. We're now able to do things like automated license plate reading systems that are connected to the home, automated package delivery. So you get a package, it's on the same network, you're notified on your phone. Now we're also getting into the next generation of healthcare, where now my parent lives in one of these smart connected homes. I can have my phone connected to their home. If their smoke detector goes off or there's a flood in their unit, I'm going to get a notice. And that then extends into much further where we've actually funded 4 universities across Canada where they're now looking at all the smart sensor data. So what really happens is this: everything that happens in the home is an event and it's time-based. I can see the switch went on, I can see a motion sensor went on, I can see a door lock opened, I can see everything that happened. If I now add in a fall sensor, well, a fall sensor, they're great, but they go off so many times that it's the boy who cried wolf. Well, if I can now correlate a fall sensor with smart home data to say, okay, the fall sensor went off, but I see a motion sensor, I know it's a false positive. You can start to see how we can use the event data with machine learning and artificial intelligence to be able to create next generation care services. But this will go all the way down the line, not just next generation care services, next generation energy savings. Like we can do a lot of things. So now if we take that and extend that to say we're going to create the smart city, we now have a network that connects the homes in the community. If those homes in the community are now using a common app, we actually have a way to talk to everybody. And now we can start to do things like, let's say we want to put an automated package system, we could share it amongst a group of houses. We could start to do all this assisted healthcare stuff. So you can see is that this infrastructure part is key. Don't think of it just as internet, think of it as network, that it connects things. And if you come up with the right strategy, you end up with the right outcomes, right? If you don't have the strategy, everybody focuses on all the endpoints and outcomes, but little about the strategy. Is the same piece. How do we get fiber across our country? So I'll be understanding of time and I'll pause there.
Yeah, no, that's great. We have a question from the audience, and this is coming from Charles. So what changes to existing infrastructure will need to be adopted to support and manage the near future broad adoption of something like drone technology for service delivery? I know that that's a loaded question, right? There's a lot of issues there, but you know, do you want to weigh in on that?
I guess I'd just say two pieces with that. I mean, there's a lot that, you know, without getting into the first part is you need the connection. So let's just talk about that. The whole part of what this is, we need fiber in the ground. And the same fiber that was put in 25 years ago still works. Even though the world is wireless, a wireless world still needs to be wired. And I guess the other piece in this, one part I didn't talk about is doing the right things from a privacy perspective. So one of the elements that we've been doing with this is that, you know, Sidewalk Labs got shut down because of privacy concerns. And a lot of people like, woohoo, like people use, like there's a lot of people just resist technology or use anything they can find to resist it. So what we've done is actually, we've commissioned the University of Ottawa, they're one of our partners. They're looking at the privacy aspects of what we're doing. So we're designing privacy into what we're doing from the beginning, because we don't want privacy to stop this. We need this. We need this to be able to care for an aging population. We need this to hit our sustainability security targets. So I know I didn't directly answer the question, but anyway, I'll stop there.
Okay. Laura, we have another question. So what about the potential for nefarious manipulation of all the data in this connectivity? And I think, you know, given the challenges of, you know, the cyber hacking and in the news, people are concerned about that use of all the data that's going to be generated when everything's connected. Can you maybe comment on that?
Well, I think, you know, I think there's two aspects, and I think, you know, Ted talked about part of it, which is I think people often confuse the amount of security that is available with the things that they see happening, whether it's phishing in their email or those types of things. Networks overall do have reasonably high components that can be put into play for security. And much like we talked about the skills for business users, I think, you know, we may need to look at the education of the average user in terms of how to protect their own privacy. But I always also put out the idea there. I have two children in their mid-20s, and you know, they're part of their quote to me is, "Why should we expect so much privacy?" And I think so. We have some multi-generational activities working, you know, sometimes maybe against some of these initiatives, in that you know, different generations are considering, relative to the use of technology, I think, in Ted's point, you know, how much privacy they want in terms of, you know, when he talks about the fall scenario and using the data relative to the lights and the motion and the trend data of an individual's house, where every day or most days when they're home and not on vacation, these things occur very systematically, but oh, here's an event that's out of whack with the trend. Maybe there was actually a fall and we need to, I think there'd be some people who'd be very welcoming to those kinds of initiatives. And so I think we have to recognize that there's an onus upon us to consider and investigate where, you know, privacy may be our concern, what options there are there to protect our privacy while still partaking within the context of the greater community.
That's a great point, Laura. And, you know, we do have some other examples that we can look to. Estonia is often talked about as, you know, standing up a brand new country and using data as the foundation for it. And so they've dealt with privacy concerns. They address it with a dual transparency layer. So yes, you know, if a police officer is looking at something related to my driver's license, I get to ask why. So there's that dual transparency. So we do have models, to your point, that maybe as people start to look at those other models, they might amend the culture or amend their expectations around privacy. We have another question. Is fiber the route to go, or should we be looking at something like Starlink as a better option? And so, you know, Laura, I'm going to let you run with that one.
Thanks. I'm going to try and not take all day to talk about the controversy between fiber and satellites, and specifically the oncoming low Earth orbit satellites. LEO is not a new concept. The low Earth orbit satellites have been around for almost 2 decades in terms of conceptually providing service. I think that there's some really good reading material out there, an article I just read this week about the actual performance, and Starlink is actually underperforming in Ontario. So it was done geographically. But it also speaks to the fact that when there are the more satellite devices in the air, because there's only about 10% or more of the actual total projected components to be in the air, the service will be good, but it won't be as good as fiber. Fiber is much more about a sustainable investment that can grow. And what Ted was referring to, fiber that's been in the ground 25 years may still have usability to it in terms of its functional capabilities. I often talk about fiber as a 75 to 100-year investment. I once in my very early engineering career replaced 100-year-old copper for phone lines. So these things do have longevity, and we're actually using construction methods to enable the quick deployment of more fiber cable into the existing duct conduits to be able to grow the capacity more aggressively. And I think, I felt like Ted was my new BFF in infrastructure when he was talking about fiber, because what we have to recognize, to his point, is with 5G and that long-term evolution is that while we have fiber in the ground today, we don't have enough. Our desire for this resource is ever-ending consumption, and we need to keep finding ways to deploy it efficiently and effectively to make sure that we can grow the networks in a sustainable investment fashion. And that's the key component that I think satellite doesn't have, is I don't think it has a long-term sustainable growth at an efficient level if you were to look at it from a financial analysis layer.
Is there a role for something like Starlink in terms of building redundancy in networks? Do you see that multiple modalities being something that's a benefit, or does that take away from sort of that that urgent directive to put more fiber in the ground?
I think that realistically, if you want to talk heterogeneous networks, I think that there would be a stacking, and satellite would really be the last end. So we'd start with fiber, we would go to 5G in Ted's component, which is, a short range, high intensity bandwidth antenna. Then you can go to other fixed antennas that are less bandwidth, but longer range. And so you can use a number of those features to look at redundancy and overlapping. Satellite is really a mechanism we use to get to very hard to reach places where the cost of that fiber is so extraneous, we're having trouble justifying it. But one of the things we have not done well in North America, in my opinion, is to look at the cost of deploying fiber networks with that opportunity for their long-term 50, 100-year growth position versus and then how we change our operations. So I mentioned health, Ted mentioned health. We've been talking about online education a bit today. We can change how we deliver certain services, and they may actually become more efficient in their delivery. So therefore, if they're government owned, we can lower the cost of delivering the service. The dollars that we were then paying could have been used to help pay for the network. And that's a very complex and very much overarching financial cost benefit substitution model. And I'd say that that's one of the things that we don't do well is that level of modeling in terms of where the benefits ultimately lie.
And analysis, yeah, which is really where YorkNet had its genesis. Rather
right.
than all the different municipalities paying carriers for connectivity, you build the municipal network. But then that provides capacity for growth and partnership with the private sector.
Absolutely.
I'm curious as well about this concept that the low latency, and sometimes we talk about it in sort of futuristic terms like self-driving cars, where you want them to be able to talk to each other, or remote telemedicine surgery, and they seem a little bit Star Trek-ish, a little bit. But when I think about manufacturing sector, there's been a huge investment of technology in manufacturing for something called lights out manufacturing, which is essentially being able to remotely operate your production lines. And so wouldn't latency also have an impact there in terms of this isn't just futuristic, this is also our efficiency of our businesses themselves? Ted,
I wanted to say one thing, and the part in this is that people put this in, or what am I going to use to do that? And that's the danger, right? Because what it's going to do is you're going to see all kinds of unfolding and opening of, like, you've just brought another idea, but if you don't put the thing there to start with, you can't do any of it. So you do need a bit of visioning. It's like I always say the same thing, the railway across Canada. If someone do a business case, it's going to cost $5 billion and I'm going to get X. No, you did it because it was right, because you knew it would enable and it would open things that we haven't seen yet.
Yeah. I remember one of the presentations you gave a long time ago. I think you talking about that ROI. I think you actually said, did somebody ever do an ROI for the wheel when they created the wheel? So that always stuck with me, and I think that points to that need for imagining. And we are at a point coming out of the pandemic where we have that opportunity to reimagine our economic and social structures. There were things about online education that people really didn't like, and there were things about online education that people did like. So I don't see us going back to exactly the way it was before. And that means we've got an opportunity to reimagine, which is maybe the message I want to close off on for this panel. So I want to extend a sincere thank you to Laura and Ted to sharing both your expertise and your passion and your knowledge of this fairly complex issue and helping to demystify it for us. And thank you again for being with us today. And to the broader audience, that concludes our session for today. I want to thank our sponsors, TD and YorkLink, and all of the speakers and attendees that participated today. We really appreciate your engagement. And going forward, we have a part 2 coming tomorrow, and we'll be touching on tourism and ag food, and retail e-commerce. So I hope you'll join us. If you do have any questions from today's session, please send us a note, and we'll be happy to work with the speakers to get you those answers. And so I look forward to seeing you all of tomorrow. And thanks. Have a wonderful day. Bye-bye.